GM, good morning. Welcome to the Milk Road Show, the daily crypto show that sums up crypto faster than you can skip a Netflix intro. I'm your host, Jay Hamilton, and today we are joined by Jason Yanowitz, co-founder and CEO of Blockworks. As you can see, we're coming at you guys from Permissionless. Super excited to be here at Permissionless III in Salt Lake City. We're going to be talking about today how conferences are a leading indicator for where markets are going, also how we can understand how they are an indicator for where markets have been. We're going to talk about nuke tokens launching in the next 6 months, and we're going to talk about a shift in the market from infrastructure towards apps that Yano sees coming. Yano, great to have you on the show.
Jay, good to be here. You guys, Milk Road rolled deep to Permissionless. We love to see it.
We love it. I love recording in your podcast studio.
This is great.
On Milk Road. This is great.
Yeah.
We're really making friends here at Permissionless. Okay, let's start with Permissionless, the conference. This is your third year doing it. Tell us how do you feel about the conference, first of all, but also based upon the turnout and what you're seeing at the conference, what does that say to you about where we are in the market cycle right now?
Yeah, good question. Okay, so the conference is amazing. We've been hosting this for 3 years. So the conference is called Permissionless III. And the reason that we don't just call it permissionless, year after year is we like to basically delineate by conference is kind of this mark in the sand and mark in your memory of like where the industry was at a certain moment in time. And it feels like, so if you go back 2022 permissionless, it was right after Terra Luna blew up. It was 6 months after the kind of prices peaked, and there's kind of still this like sense of optimism, but a little bit of worry. All right, 2023 permissionless last year, there was a deep sense of dread, I would say. And basically it felt like we'd all kind of bunkered down together in this deep sense of dread. The SEC was, issuing lawsuits, like they were candy. This year is, I think everyone kind of feels like there is this change that is about to come that hasn't actually taken place yet. Conferences are, you were mentioning leading and lagging indicator. The output of what you're seeing today happened 6 months ago. So conferences are a really good indicator of where the industry was feeling and what the industry was really feeling 6 months ago. My takeaway from this is everybody on site, there's a really large, sometimes there's a alignment between how people feel in person and how people feel online. Right now, my takeaway is there's a massive discrepancy. There's this big gap between how online sentiment is versus in-person sentiment. And my summary would be online sentiment is concern, and we've had several months of price consolidation, and it feels like, kind of angst around like, what are we even really doing here? In person right now, it feels completely different. I would say the entire there's thousands of people here, and there's an extreme amount of excitement and optimism about really kind of like what happens post-election. Everyone, election 30 days out, everyone's kind of waiting on that. So my takeaway from this is like, people online don't realize what is about to come in the industry.
Hell yeah. I feel the same way.
Yeah.
And being here on the ground, you really feel that energy in a totally different way than you get online, which is why everyone should come to Permissionless next year. But you guys do other conferences as well, and you mentioned before we started recording that you guys have another conference coming up. Tell us a little bit about what you're seeing for that conference and what that tells you.
So we have 2 conference brands. We have Permissionless, like deeply crypto native audience. We have another brand called Digital Asset Summit, DAS. We have our 10th DAS coming up in March 2025. We've been hosting it for several years, basically since Blockworks began. We have never in the history of Blockworks had an event we recently announced it and launched it a couple weeks ago. We have never in the history of Blockworks had an event with so much demand right out of the gate. So when you zoom out and think about this idea that conferences are a leading indicator, what we are seeing on the ground is that people are not like slightly underestimating, they're drastically underestimating this onslaught of capital and institutional capital that is about to flood into the space. And the reason we know that is because we have these unique insights from who is agreeing to speak at the event, that has never agreed to speak at the event. These are politicians, these are institutional capital, these are the big LPs and the GPs of the world, and then also, candidly, the sponsors, right? The protocols and what they do with their dollars are actually a good proxy for, I think, where they believe the industry is going. So when you see a lot of sponsorship dollars flooding into an event, it's the backbone of that is the idea that a protocol is bullish on the future, right? That's what we're seeing, and that's what's leaving us like very, I would say, a lot more excited about the next 6 months than I think most people online are.
Yeah. It's so interesting because you have a podcast as well, and it's always this balance of, I don't want to seem overly bullish because I don't want to be that guy who's just screaming, the most bullish thing every day. But I honestly really do, for the first time ever, feel like most people aren't bullish enough. Do you feel that way too?
Okay, zoom out to macro. You're getting, let's not overcomplicate this. The dollar is turning over, right? We're going into a new dollar regime. We're going to potentially a new administrative regime. Based on polling and markets, it seems like 50-50. We go into a new administrative regime. And you're going into a new interest rate environment, right? Where the last couple of years have been interest rates yanked higher than they've been in decades, right? So now we're going into a lower interest rate environment. It's like, let's not overcomplicate this, folks. It's we're entering about as bullish of a setup, I think, as you could ask for.
Yeah, and I think you nailed it earlier when you said that the key date that everyone has circled in their calendar is the election. And I don't really think it matters. Sure, it matters at the edges who wins, and there will be different decisions that would be made, of course. And it seems like Trump would be more bullish, but the show goes on, and I think at this point, we just need to get past the election. We just need to remove that uncertainty.
Yeah, I mean, my two quick thoughts on that are, and I think this kind of topic has been beaten to death a little bit, but there's a little more nuance than I think people like to discuss with, like, oh, will Trump be better? Will Kamala be better? Okay, so the first thing is that markets don't like uncertainty, and the market, crypto or not crypto, the market just wants an election to happen, and they just want someone to be picked so we can get the uncertainty out of the market. So Kamala, bullish for the markets, Trump, bullish for the markets. And I think people who say Trump bullish, Kamala bearish don't really understand that. The second thing is that I don't think it's that Trump is amazing for crypto and Kamala is the worst thing ever for crypto. I do think it's that crypto in the United States will do much better under Trump presidency. Kamala, if she follows the Biden administration and this current SEC, will do worse in the United States. But the industry as a whole is going to flourish over the next 4 years, no matter who's president.
No matter what. I completely agree. Okay, let's shift gears because you have some unique insights, not just from the conference business, but from some of your other businesses as well. And I want to chat about the way you see the current landscape of how many tokens there are currently versus how many tokens there is coming, and how you think investors need to think about their positions now versus what's going to happen in the next 6 months, bull market or not.
Okay, maybe we can start to segment this out into 4 groups of tokens. There's the initial batch of tokens that was kind of like the ICO era to like 2020, right? It was Aave, it was Uniswap, Compound, folks like Maker, folks like that. And those tokens, the way that they issued their supply, a lot of them did ICOs, and a lot of them had a large percentage of their supply was out in the market early on. So you got to a real valuation quicker. That was the first bucket. Second bucket is what is happening right now. And it was all mostly infrastructure, some DeFi apps, but a lot of L1s and L2s and folks like that. All right, second wave, which has been mainly 2021 until 2024, are infrastructure where the common idea of how to launch a token was low float, high FDV. So you actually issue a really low amount of your tokens into the public, and what that does is it kind of artificially inflates the total value of your token. So that's what people refer to as low float, high FDV tokens. And they seemed really exciting because they're doing all these cool things. A lot of the L2s are like this. However, what that comes with are these massive unlocks where all of the buying ends up getting eaten up by more tokens that are unlocking into the market. Some people do monthly, some people do quarterly, some people do yearly, but those unlocks keep eating into the buying demand, which is why a lot of the L2 tokens are not going up. All right, so that's wave 2. Wave 3 are what nobody is talking about for some reason, which is they're about, let's say, 800 to 1,500 tokens that are going to launch over the next several months. And most of these folks are waiting for the election, I would say. So they're waiting for a slightly better market. They're waiting for the election. Because we have this advisory business and we have this research business and we have media business, we have a really unique insight into what's coming over the next several months. What's coming is an onslaught of hundreds, if not probably over 1,000 tokens. And I think the difference will be that those tokens understand that low FDV, high float is a bad model to have your community make money. Your community is not going to make money. So they're actually launching it what is most what I think is a much more reasonable valuation. And so for the Milk Road audience to understand, now is not the time to basically pick your winners and say, hands up, I'm not going to buy anything else the rest of the cycle. I think there's going to be a lot of really, really, really interesting new opportunities that come. That's wave 3. And the last thing is wave 4, which are going to be the app tokens that are going to come. Mm-hmm. So we're going to see a polymarket token in the relatively near future. Infinex is an app that Kane, the founder of Synthetics, launched. You're going to start to see these apps where people, investors, and their token holders can actually make money, and that's going to cause this onslaught of app tokens probably in the latter half of 2025.
Mm-hmm. When you zoom out and look at the current state of builders in the space, you mentioned the infrastructure was really the focus early on, and we still need to build the infrastructure, but I'm curious, everybody's been talking about apps for so long. And we all want apps, and we want apps that hundreds of millions of people use, and we're all kind of sitting here waiting. And don't get me wrong, I do believe that speculation is an app in itself, and it is a use case, and we do have apps that have, the exchanges have achieved that. What do you think we're going to see from the app side? Is it going to be more speculative stuff, or is it going to be different use cases that we haven't seen yet? Where do you think it's going to go?
I think my cop-out answer is yes, and it's all of the above. So the first thing I'd say is we have actually seen there was a wave of apps. This was 2020. We've already seen one massive wave of apps, and we saw what it did for the industry. That was DeFi summer, right? Uniswap is an application, Aave is an application, Compound is an application. We actually saw a wave of apps, but the problem is that was 4 years ago, so people are sick of it. So now people need a new wave of apps. I think there are two things that will happen. One is you can look at the token markets to tell you what is going to happen next, and the relationship between the private venture markets and the token markets. So what I mean by this is, as long as there's a way for tokens to keep launching and going public at higher valuations than the last private round, we will continue to get infrastructure and protocols. But you're just starting to see that roll over. So you're seeing folks who maybe raised at a $3 billion valuation in their last private round going public and launching a token at a $2 billion round, $2 billion valuation. So what that does is it disincentivizes the investors to go invest in and lead rounds in Series A, Series B, whatever, in the infrastructure. So you're going to see these investors just not necessarily because they want to, but because they need to make returns, they need to invest in the applications. That's one of the things that's going to happen. The second thing is some of the applications are going to start making money, right? It's Infinex, it's Polymarket launching a token. And then the third thing is, to your other question, there's going to be a lot of speculative apps. I think speculation pulls people in. Mm-hmm. No different than how other industries were built, right? Oil in the 1860s and 70s and 80s, like speculative boom. The railroads, right in the 1850s, speculative boom. Like
it's not a bad thing.
That's how industries are built, is speculation. I think what will be different is that it's speculation on culture and society instead of speculation on financial assets. So the biggest difference being, Uniswap let you bet on financial assets, different tokens. There is going to be hundreds, not even dozens, hundreds of applications that let you bet on and predict and play with your friends and bet on, will Travis Kelce and Taylor Swift get engaged? Will Mr. Beast say the word elephant in his next video? And that's going to bring this massive amount of speculation into society and culture. Most of those will fade away and they'll be irrelevant and they might have too much speculation, but a few of those will stick, and those will become the new Uniswaps, Aaves, Makers, Compounds, where there's these everlasting applications that, Aave's been around for 9 years now. So I think that's what we'll see.
Amazing. Okay, final topic before we wrap up here is, you mentioned before we started recording that there is a problem with valuation frameworks within our space. And not a problem, just is a lack of them, to be perfectly honest. If you look at the traditional finance markets, they have such well-developed valuation frameworks for how they think about their investments. What are your thoughts on the valuation frameworks within crypto?
Yeah, so traditional capital markets have these valuation frameworks, like you mentioned, like price to sales or EBITDA multiples or revenue multiples. We don't have that in crypto. And what that does is it limits the amount of institutional capital that can come in, because when they look at optimism at insert your $1 billion I don't know what their valuation is, but several $billion valuation. Is that a fair valuation? Not a fair valuation? So the first batch of this was, I got to give credit to Token Terminal. They did a nice job of starting to put these P&L statements around protocols and L1s and stuff like that. What they got really wrong is they just got the metrics wrong, right? So they started to look at, and other people too, not just them, but they started to look at something like profit. They were like, profit equals fees minus issuance, or profit equals burn minus issuance rate. That is what they're trying to do is apply a company metrics to what is a commodity, right? Solana is a commodity. Yeah, Ethereum is a commodity asset. It looks much less like equity, much more like a commodity. So we think there are 3 valuation metrics that we think are really important and that will become important. There's total economic value, real economic value, and token holders' net income. So total economic value is fees plus MEV tips plus issuance. That's total economic value. Real economic value would be the network fees plus the MEV tips. And then the token holders net income would just be the real economic value minus the operator's payments. And that was probably a bunch of gobbledygook, whatever. But I think what we're trying to do with these new basically metrics that we're introducing into the industry is our belief is you improve the metrics, you improve the industry. And I think that is one of the things that will unlock a new wave of capital coming in.
Well, and you also put everybody on the same playing field where we're talking apples to apples instead of apples to oranges. And
Right.
There's so many.
So is Arbitrum better than Optimism? Are they better than? And how do they compare to ZK Sync? And how do they compare to Polygon? And then can you compare that to Solana? We believe yes, you can compare all of those things, and you could say. It's basically like saying, what's the revenue of this company versus this company? What's the profit of this company versus this company? And we believe that total economic value, real economic value are the ways to do that. So
I love that. Excited to see more come out of that. Excited for us to share that with the Milk Road audience too. Yano, thanks so much for your time today. Thanks for sitting down with us. Thanks for having the team at Milk Road at Permissionless. It's awesome to spend time together.
Yeah, grateful for what you guys do. You guys have built one of the best media companies in a very quick amount of time in crypto. So just grateful for everything. Thanks for having me on.
We just big hug it out here.
Yeah, hug it out. Exactly.
I love it.
Exactly.
Thanks so much for listening, and everybody have a wicked awesome day. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening, and my friends, have a wicked awesome day.